This video is made only for educational purposes. No stock, ETF should be bought without advice from your investment advisor. Top pharma stocks to buy now. Divi's Laboratories. Divi's has charted out a strong growth path encompassing its 6 growth pillars, which would propel the growth going ahead. The CSM business is expected to stage a double-digit CAGR over FY22 to FY 2024, driven by expanded capacities going on stream and strong demand environment. Long-standing customer relations, established capabilities, backward integration, focus on quality and benefits of scale would be the key positives, while depreciating INR also bodes well for Divi's. Sanofi India. Sanofi offers drugs in therapies like diabetes, cardiology, thrombosis, anti-infective, CNS, allergy, vitamins, minerals and supplements. Lantus, Allegra and Combiflam are in top 100 pharmaceutical brands in India. Sanofi is one of the fastest growing companies in India in anti-diabetic therapy. Ajanta Pharma. Ajanta Pharma is a specialty pharmaceutical formulation company having branded generic business in India and emerging markets, generic businesses in US and institutions businesses in Africa. The company has a well-diversified business model in terms of markets, therapies and products to fulfill unmet patients' need. This also helps it to de-risk the business to a large extent from possible uncertainties in the business environment. The large contribution of near 68% of business comes from a wide range of branded generic products in around 30 countries in Asia and Africa. Each geography has carefully chosen therapies and products to make its business valuable. Additional about 22% comes from generics business in the world's largest market, the USA, and remaining comes from anti-malaria institutional business in Africa. The company's strategy to invest in different markets and geographies in a sustained manner has made its business model quite resilient. The company has also built competitive edge in each of the markets by identifying unmet needs and offering customized products. It is this edge that provides it continuous growth. IPCA Laboratories. IPCA Laboratories Limited reported weak results for the last quarter and the numbers missed estimate. Revenues grow 1.5% YoY to 1430 crore, while the PAT declined 26.3% YoY to 197 crore. IPCA expects the strong traction in domestic business and sustain and aims to outgrow the industry by 1.5 times. There was plan expected to commence commercial production over the next 1 year and could improve backward integration levels. Muted performance in the UK, rising cost pressures could act as near-term headwinds and drag the performance. Share, give a like, leave a comment. Please subscribe our channel